PSX breakdown. The Pakistan Stock Exchange faced heavy profit-taking and technical resistance during today's session, snapping its multi-day recovery rally as local and global risk dynamics forced a broad capital consolidation. The benchmark KSE-100 Index witnessed an aggressive intraday reversal, shedding 2,320.78 points, or 1.30%, to close the week at 175,802.79 points. Market sentiment was weighed down by a significant correction in the Sharia-compliant KMI30 index, which tumbled 1.37% or 3,422.76 points to settle at 247,323.37. This sharp pullback follows intense geopolitical volatility in the region and growing institutional concerns over local circular debt settlements. Total traded volume for the KSE All-Share Index contract registered at 617.78 million shares, with a total market turnover value valued at 29.82 billion rupees. Institutional data tracking revealed heavy net selling from local mutual funds and insurance companies, heavily offsetting selective accumulation by individual retail asset owners. The State Bank of Pakistan's tight monetary policy posture and structural benchmarks tied to the ongoing IMF program continue to prompt portfolio managers to lock in recent profits across highly leveraged industrial asset layers. An isolation of major sector movements maps out the precise fundamental engines behind today's index contraction, with energy extraction and heavy manufacturing bearing the brunt of the capital exit. The oil and gas tradable index dropped a significant 1.71%, or 605.59 points, to settle at 34,758.02. Heavy liquidations clustered heavily around core exploration and production companies as global crude price volatility prompted institutional asset reallocation out of cyclical oil assets. The commercial banking sector also registered notable downward adjustments, with the bank's tradable index sliding 1.18% to finish at 49,936.11. Major market caps like Habib Bank Limited and United Bank Limited faced profit-taking after hitting multi-week highs earlier in the macro cycle. Furthermore, the cement and fertilizer complexes experienced systemic profit-taking. High corporate input costs stemming from upward electricity tariff revisions and lingering gas supply distortions have kept allocators highly defensive regarding long-term construction and agricultural capital expenditure plays. Despite the broader market-wide retreat, specific idiosyncratic corporate announcements triggered massive individual stock volume. Lotte Chemical Pakistan Limited emerged as a primary fundamental highlight, bucking the index decline entirely following an exceptional second quarter corporate earnings release. Lotte Chemical reported an extraordinary 192% quarter-on-quarter increase in its earnings per share, printing an EPS of 1.87 rupees alongside a highly competitive cash dividend announcement of 1.50 rupees per share. This structural surprise triggered immediate buying, catapulting the stock to the absolute top of the daily volume charts with over 70.0 million shares changing hands. In contrast, industrial and infrastructure conglomerates faced significant structural adjustments. In official regulatory filings on the exchange portal, Tal Industries Corporation and Barber Ferrad Sugar Mills announced upcoming board meetings to finalize third-quarter financial accounts. Portfolio managers are carefully trimming exposure ahead of these releases to avoid potential operational shocks stemming from domestic agricultural disruptions. As market participants look ahead to next week's trading configurations, tactical execution demands a strict evaluation of key technical levels. The KSE-100 Index is now entering a critical testing ground as it approaches the immediate psychological support zone near 175,000 points. A sustained failure to defend this level during Monday's opening hours could open the door for a deeper structural correction toward the next major demand cluster near 173,500. Conversely, if local institutional buyers step in to absorb the current supply, a healthy consolidation phase will establish a strong baseline for a renewed push toward the prior high of 178,000. We advise maintaining a disciplined, highly defensive portfolio allocation strategy. Lock in capital safety by prioritizing high dividend yielding commercial banks and corporate liquid names like Lotte Chemical, while maintaining an elevated cash buffer to exploit eventual value hunting opportunities across high cap blue chips. That concludes the Pakistan stock market update. We will see you at the next opening bell.